So Kim Kardashian has just been, or it's been announced that she's going to have to pay $1.26 million to settle a probe into her dealings with the Emax crypto, Ethereum-Max. And the whole thing is around this idea that there was this cryptocurrency that was essentially a pump and dump. I mean, the founder or the owner of the cryptocurrency got a lot of these celebrities. I think Floyd Mayweather was another one, to tweet out or whatever, Instagram out, or that that they owned some of this cryptocurrency, and as a result, the cryptocurrency shot up. I think it topped out at around $108 million. And I think in terms of a market cap, I'm not entirely sure, but basically it shot up, and then fell down, basically a pump and dump. So everybody who got in low got to exit at a higher price, make a bunch of money, and people that were left holding the bag lost a lot of money, you could say. And I think, if I'm not mistaken, I saw an article that said Kim Kardashian was paid probably $250,000 to promote the cryptocurrency on her accounts. And then if you think, okay, well, if she held any of this coin and participated in the pump and dump, I mean, how much money had she probably made from this? 1.26 million could, at the end of the day, seem like a slap on the wrist in terms of a punishment. But I think what this highlights is the negative side of having the PR machine and the publicity that these celebrities have. Just last week or a few weeks ago, Kim Kardashian said that she was going to be, bringing to market a private equity firm. And of course, a lot of the value that she brings to a private equity arrangement is that she can spotlight or highlight any of the businesses that they invest in. And of course, that's PR and visibility and attention that you really can't buy, that level of attention, that level of visibility. And so there are some arenas where that kind of stuff is legal, of course. The driving PR and driving visibility is a big part of a marketer's day. It's a big part of an entrepreneur's day. The other side of the coin, though, is that when you use your publicity and you use your reach to manipulate markets, you fall into a place where you don't really want to be. You could argue that a lot of the stuff with Elon Musk and his reach and his ability to move crypto coins and his ability to move even the Tesla stock is market manipulation. But there seems to be kind of no slap on the wrist there on that side, at least not yet. So I think this is an important story because it highlights that, one, you really shouldn't be getting your financial advice and investment advice from celebrities because you don't know what their motives are, whether they've been paid to do this stuff. And it shows that there is a way that reach and publicity can be used in a way that isn't always upfront and upstanding. I think we'll caveat all that too with, look, hopefully this fine is enough, or this penalty is enough to dissuade or make people shy away from doing this kind of stuff. But if that 1.26 million is a small fraction of what she's made totally from this deal, then I mean, it's not enough incentive to say, okay, I'm not going to do it anymore. And you just got to be careful, I think, out there when you're talking about money and stuff, because people's motives are always different. There's, one thing that's I've always thought was important to remember with the financial markets is that on every side of your trade is somebody else who's either making or losing money too. That's the whole point with a transaction. So pay attention out there. Interesting story from kind of a consequence standpoint, like why this happened, and it's just a story about being careful about what you do, and then also from a marketer standpoint, how important it is to get visibility for your business. Because on the flip side, like the visibility can be used for nefarious reasons too.